Just a reminder, guys, I am a licensed realtor here in the state of California, but I am not a legal professional and I do not know all communities around the country. My knowledge is specific to Central California, so always consult with a local realtor and a local lender in your area for more specific advice. What I do here is mainly just to give you guys some tools for you guys to ask questions with your local professionals about. Anything that I say here inside of these videos is from my own personal experience. So always verify, always do your research, and don't just count on me for advice. Take it into your own hands as well. What's going on, guys? My name is Austin Wyrick. I'm a licensed realtor here in the state of California, and today I'm going to be talking to you about the things that you need to buy a home. So first thing is credit score, which also mixes into one of my other things, which is DTI. So I'll put them together today. So you need a good credit score and you need a proper debt to income ratio, DTI, to be able to get a home. So when it comes down to the credit score, the main things that banks look for when it comes to a mortgage, number one, I would say, is debt to income ratio, which basically what a debt to income ratio is when you're, let's say you make $4,000 a month. So banks usually only will allow about a 50% debt to income ratio for everything, including the mortgage that you're applying for. So let's say that you make $4,000 a month. That means that you can have up to $2,000 a month in debt payments. So with that being said, let's say that you have a $500 car payment. So that means that the bank will only allow you whatever loan it is to be no more than $1,500 a month in cost. So for example, let's say the bank does its calculations and says that, you know, the house you want at $280,000 would cost you $1,700 a month. They won't approve it. They'll only approve you for whatever $1,500 a month will get you. So say $1,500 a month is $240,000. That's what they're going to pre-approve you for. And so most of what the bank goes off of when it comes to your budget and your approval is debt to income ratio. If you've got a 60 or 70% debt to income ratio, which happens a lot, even if you have good credit, and it's more common with good credit, say you have a 750 point credit score, but you have 2 car payments, you have a loan payment, you have some credit cards, and when you add all that together, it's 60% debt to income ratio. You can't buy a house. The bank doesn't think that you have enough money to be able to afford a house, which I know is kind of weird, but you know, that's just how they do it. So debt to income ratio is very important. The next biggest thing obviously is payment history. So payment history, just pay your payments on time. It's not going to kill you if you have 1 or 2 over the last, couple of years that I forgot that I had a balance on that credit card, whatever it may be. That's, probably not going to affect you. And then credit inquiries is another one. If they see that you're looking for a lot of credit and you have a lot of recent inquiries within the last year or 2, that can affect your score. That can affect your approval as well. And then I would say the other thing is account length history. So a lot of people, and I've had people come to me before, and basically what they tell me is, I should have a great score. I pay cash for everything. I paid cash for my cars. I don't have credit cards. I don't finance my furniture when I go buy furniture, whatever it may be. Well, so that's great, and you probably will have a good score. But the problem is that banks want to see a history of you actually paying on time. So if you don't have a credit card, or if you don't have a car note or something that they can go off of your payment history and you have no payment history, that's basically like them, throwing money into the dark. They have no idea what to expect. Obviously, you're probably pretty financially responsible. And honestly, if I was lending money, if somebody doesn't borrow money ever, I'm going to assume that they're pretty responsible, and I wouldn't really be that worried about it personally. But that's how the banks are. So you need to have some established credit. Say that you're looking to buy a home, even if you have a good amount of money down, you need to go out and get a credit card, put stuff on it, pay it off every month, do that for a few months, establish some history of good payment history, go buy a couch on finance for 0% interest at the furniture store. Pay it for a year, pay it for 6 months, show some good payment history, and then that problem will be solved. But you have to have some payment history because, like I said, the banks are pretty much blind. If you have no payment history, they don't know how you pay. Maybe you're a horrible bill payer. You just have never had credit, but you're a horrible bill payer. They don't know. So you need to establish that. That's very important. Okay, so the next thing that I'm going to talk to you about is down payment. So with down payment, there's a few different factors. So conventional is as low as 3%, and conventional financing is basically where the bank is financing it themselves. The money isn't insured by the government. The bank is pulling it out of their funds and they're loaning you the money. So conventional loans for your personal home typically start at about 3% if you have really good credit, and are around 5% minimum if your credit's okay, but it's not perfect. And then when you go into buying investment property, then you're talking about 20% down, but that's in a different video that I'll talk about investment property with you guys. And then I personally, as a realtor, always recommend my clients, if they can, putting 10% down, because it erases something called PMI, which I discussed in a video in the prior. So if you're interested in that, go check that one out. But down payment is very important, and you have to make sure that you have enough. So let's say that you go onto Zillow, you see a house, oh wow, I love that house. It's $350,000. Okay, so you're gonna say, okay, I need 5% down, let's just say, to buy this house. So get on a calculator, say, okay, 350,000, that's gonna be $17,500 that you're gonna need as a down payment for that house at 5%. So, do the math on what fits your criteria. If you're seeing a bunch of houses you like and they're $350,000, then calculate what 5% of that is, save that away. Once you have that, great. The only other thing that you need to know when it comes to cost when you're buying a home is closing costs. Now, closing costs aren't nearly as much as your down payment, but they still are a significant piece. Typically, banks say that it's about 6% of the purchase price is your closing costs, which is possible. Sometimes, depending on the market, you can get the seller of the property to give you a credit of no more than 3%. Banks won't allow them to give you the whole credit of 6%, but you can put in an offer 3% closing costs to be contributed by the seller. And that just depends on the market. If it's more of a buyer's market, the seller might be willing to do that. If the seller's got 10 offers, they're gonna say, why would I do that? I got 9 other offers here that aren't asking for that. So it depends on your market when it comes to that. So closing costs, what I always say is, the closing cost on my side as the realtor, you have your inspections, which depending on how many inspections you get, I always recommend, getting all 3, your pest, your roof, your general home inspection. So it just depends on the scenario. But for at least here locally in Fresno County, where I'm a realtor, I would say that, and depending on the square footage as well, rates for inspections are about anywhere from about $350 to $600, depending on how big the home is again. Most home inspectors charge based on the square footage of the property. So if you're buying an 800 square foot condo, he's probably only going to charge you like $250, $200. But if you're buying a 3,000 square foot house, he's probably going to charge you like $400. And then pest reports, the same thing. They start at around $75, and they can go up to about $150, $200. Just depends on the size of the unit. And then roof inspections. Some roof inspections, some roof companies, they don't charge you, and they do what they call a roof cert. So they'll come out, they'll look at it, and they'll say, well, this, and that is wrong with the roof. And for us to certify it, you would have to pay us to fix these things, and that's going to cost you $1,500. So it's beneficial to them. They make money. And the nice thing about a roof cert is that the roofing company certifies that roof for 2 years. So let's say next winter, a year after you buy the house, the roof is leaking. Well, then the roof company has to come out and fix it because they certify that that roof is good for at least 2 years. So that's, it's nice. It's kind of like a warranty. But so that's a big piece of closing costs. And then the other things are the things that we negotiate in the contracts here in California, which are escrow fees, title insurance, and transfer taxes. Sometimes if it's in an HOA, you got HOA transfer taxes, HOA document filing fees, all kinds of different things like that. Mobile homes, you've got application fees, you've got, again, transfer fees, just different kind of fees depending on what exactly, the situation is. Condos and mobile home parks are always going to have a little bit more cost to them just because they're managed, but regular homes, it's kind of down to those first three that I was mentioning in inspections on my side. On the other side, with the mortgage company, that's where most of your closing costs are going to come from. So what I always tell my clients is, if we haven't found the house yet, give them a scenario price and have them give you a quote on what the closing costs would roughly be. They're never going to be able to tell you exactly until you actually have a house in contract. Once you have a house in contract, you can go back to them and ask them, hey, what are my closing costs going to be? And they're going to be able to give you a pretty accurate account. Things may change a little bit over the escrow process, but not too bad. So, that's my recommendation is, and what I always tell my clients is, this, and that is what's on my side. But most, like 80% of your closing costs are going to be from the lender. So you're better off asking the lender about closing costs as well, because that's where most of the money that you're going to be spending in closing costs is going to come from. So definitely speak with your lender to find that out. And then what I would say too is just, just make sure that, always analyze your situation and figure out if it's the right thing to buy a home. And for my clients, I'm always there for them to give them the best input. Even if I don't make a check, maybe I won't make a check selling in my house. Maybe I'll tell them, this isn't the right time for you to buy. You need to rent for another year. The core value of a realtor should be, and if it's not, you need to find a different realtor. The core value of a realtor is to look out for your best interests. Your best interests are the most important thing. When you care about your clients and you care about their best interests and what's going to make them successful, the money will come. Because when you take care of people, you're going to be successful. So my first priority is making sure that I'm helping my clients have whatever the best decision is, whether it be to rent, whether it be to buy, whether it be just anything. I always like to give a non-biased opinion because, that's what I would want out of a realtor if I had a realtor, or if any other service. I want somebody to look out for my best interests and not just their pocketbook. But anyway, so these are the main things that you need to be prepared for in order to buy a home. I hope you enjoyed this video. I hope it's helpful to you. And please like and subscribe to my channel and leave any comments below with any questions. And until next time, we'll see you later.